what's good, everybody? Welcome to the Closing Beat. Happy Thursday. Hope you're having a great day. Good day here at Jazz. Not a good day for the markets. We'll talk about that here in just a second. We're financial advisors here at Jazz Wealth. We manage long-term retirement accounts. We're the hardest working advisors you're ever going to see, and I'm going to prove that tonight to our customers. We're doing a sort of a big overview. We're going to talk the economy, portfolios, China, new home sales, you name it, we're going to cover it. And that doesn't mean it has to be a long, boring class. Watch, I'm going to hop right to it. Let's just cover what you need to know. And we're also going to go over our portfolios, changes we made to them, and then help them with any questions. So you already have the invite. If you're one of our customers, even if you joined today, you have the invite in your inbox. I hope you'll join us tonight. I will be there at 8 o'clock Eastern time. And so we build and manage our own portfolios, by the way. So our funds are on our website. Just like Vanguard has mutual funds, Jazz Wealth has funds, but we don't charge anything for them. Completely free, expense free, no hidden fees, no garbage like that. Anyways, you're not here to hear the sales pitch. You're here for the market update. Let's talk about it. You got the Dow lower by 201, S&P 22, Nasdaq over 1% to the downside. What happened? If you happen to watch the markets overnight and you follow the futures markets, you notice that when the ECB came out, well, it happened before this, but let's just say that this is why, because that's what the media is focused on. The ECB, European Central Bank, came out and they basically admitted weakness in their overall in their economy. So they left interest rates unchanged. They came up with stimulus, which is essentially what we did here in the United States, where we let banks borrow money for next to nothing so that they could lend it out for a higher amount. Consumers would borrow money, the banks would make money, the economy would grow. That's their plan over there. And they actually lowered their overall growth rate by quite a bit. I believe they had it pegged at 1.7. They brought it down to 1.1. So basically a bunch of stuff to admit defeat and that their economy is slowing down. And so, that didn't help. That didn't help the market start the day. You can actually see on the chart down to your right here that sort of early morning sell-off, just investors responding to that news. Now, you're going to see a lot of this. This week is the worst week of the year for the market. That sounds pretty scary, doesn't it? Like, oh my God, this is the worst week of the year for the stock market. Well, let's talk about it. Think about what's going on here. I'm going to zip over to the charts real quick. Here's the beginning of the year, right on the chart. It's been nothing but straight higher, so totally understandable for a pullback here, back to the 200-day moving average. Yeah, it's the worst week of the year. It's a tiny little pullback, so for now, nobody really cares. But it's interesting how they make it sound kind of bad. I saw that headline today, and I saw the Russell 2000 had its worst day of the year yesterday. That was the news, like local financial news and stuff. And it was also on Bloomberg as well. And I thought, why would you do that? Like, why do you want to scare people like that? I mean, it's a cool stat, right? But who really cares? So the markets are pulling back here in the short term, but let's put it into perspective for you. How are the individual sectors doing? Well, if you watch the show, you know real estate. ICF is one that I use to to show you this. You could use any of them, any broad-based ETF for REITs. That's your best performing area. If you look at all the stocks inside of these exchange-traded funds or all the REITs, 97% of them are over their 50-day moving average. That's the blue line on my charts here. So really, really good. Utilities is the second best. Is the second best in terms of individual stocks doing well. Industrials, even though it's pulled back here and it's making headlines, oh man, 4 straight days, is it just going to keep selling off? What's going on? This is still your best performing sector in the S&P 500. It's up still over 15%. So industrials doing well. Energy still higher by about 14%. And that has pulled back a little bit, not a big deal. Tech stocks, that's your third best performer, 13%. The S&P 500 up just over 10%. So sectors currently beating the S&P 500, consumer discretionary, real estate, I mean, that's sort of an obvious one. Communication services, which I like that chart, by the way. If you happen to be a technical trader, if that thing holds up in this area, good looking chart for technical traders. And then technology, energy, and industrial. So everything looking pretty good in terms of how they've done so far this year. A little pullback isn't going to hurt anybody. We're going to go over some interesting and unbelievably geeky stats tonight to kind of illustrate where are we and what's going on with that, so we'll cover that. There was also a report of mutual fund flows. So I commented this in December. $44 billion flowed out of mutual funds and didn't really go anywhere because investors were panicking. You guys were saying, uh-oh, the markets are selling off. You thought for some reason that was the end of the world, and so $44 billion came out. Well, this round here, another report just came out. It's the same company, ICI, that puts it out. Equity mutual funds, right? So your target, not your target dates, your index funds, right? Index mutual funds. Outflows, meaning money coming out of those, $7 billion last week. And you go, well, is that a big deal? Like, is $7 billion a big number, a little number? Help me out. Help me understand this. That's bigger than 86% of all other times, all other weeks since 2007, before the financial crisis. So a lot of money coming out of mutual funds. Where'd the money go? If you dig deeper into that study, and you're sort of geeky like me, bond funds. So bond funds had one of the best inflows of money in history, top 96% as far as the amount of money going in for the week. They killed it. So it looks as though more people are starting to move money towards bonds. And in particular, they went into investment-grade corporate bonds. So it's not like they went to the government. Investment-grade corporate bonds. Municipal bonds also saw a pretty good uptick as well, if you follow that sort of thing. If you don't, I'm sorry I just bored you there. Occasionally you got to cover different stuff. Keep it fresh, Okay, so because of that news overnight, you had, where am I typing? I'm typing in nothing here. Because of that news overnight, you had a strong move in the dollar. So if you follow currency pairs, here's the euro versus dollar, and of course, euro breaking the new lows, dollar breaking the new highs. I'll tell you another way you could look at it if you don't look at Forex. You could use an ETF, UUP. This is the US dollar here. It's the dollar index, right? So it's not paired against anything. The U.S. dollar just scorching to new highs on that news there. The euro, obviously, a little bit weak. And they kind of admitted why. Okay, if we go across here to some other sectors real quick, metals and mining, that sector continues to pull back right into the 50-day moving average. So a really, I won't call it really extended, a nice decent pullback into what technical traders call support. It's about 8% lower since hitting this high back in here. I think if it hit the 10% mark, you would get people interested in that. I'm not telling you what to do. I'm just kind of what you see. Gold miners, interesting today. Barrick Gold, the drama going on between Barrick Gold and Newmont. Well, Barrick Gold had a good day. It was up almost 2%. And in the GDX, this accounts for about, what's going on there? In the GDX, there it is, the symbol gold or Barrick Gold accounts for about 11%, almost 12% of the total ETF. So when Barrick Gold does well, of course, the gold miners tend to do well as also. We covered transports already, but they continue to pull back, almost back down to the 50-day moving average. So that's all I got sector-wise, unless you want to geek out a little bit more with me. I could go on forever and ever. Take a short break for a drink, and then ever. American Eagle Outfitters, it's a public company. The stock did pretty good today. I mean, from a technical point of view, if you follow charts, you sort of like what happened today. I mean, you can disagree, I guess, but I think you sort of like that sort of quick U-shaped reversal there. I won't go into all the geeky stuff, but anyways, they reported earnings better than expected. Revenue was a little less than expected. Weaker profits here in the current quarter. And so the stock, the company, they're spending more money on opening new stores. So investors were like, I don't know what's going on. That's like when ExxonMobil said yesterday, we're spending more money to grow. There's a little concern there, understandably. But the stock's been stuck between 22 and basically 20 here, going all the way back through the beginning of the year. So break above that, grabs attention, sets off alarms, sets off the short-term traders, the long-term traders, gets the shorts to maybe want to come out of the position, sparks a bit of a bullish sort of rally there. I'm just saying that could be what you kind of see there. Kroger in the news. Look, these guys are expanding. They're investing in themselves. Their digital side of things is not as great as it could be. Investors, I think, give them a hard time for that. But they're spending money to grow out their stores. The stock today sold off about 10% because 68% of the time they beat on earnings. So this stock is not in its entire history, right? Go back to the very, very big IPO day. it beats 68% of the time. So when a stock all of a sudden doesn't beat on earnings, sparks questions. Whoa, what's going on? Is this changing? Is this just a temporary blip? I happen to think it's a temporary blip because, man, they're firing on all cylinders here. This is the largest grocery store in America, by the way, if you didn't know that. They beat on earnings 63%, revenue 63% of the time as well. So again, it's a little bit odd when they miss. People tend to overreact, I think, in the short term. Barnes & Noble down 12.5% today. Earnings came in way better than expected. Revenue did decline. Operating profits, guidance going forward, all very weak. So investors just not impressed. Stock's down by about 30% this year. You like a discount, do you? There's a discounted one for you. Five Below. So Five Below, Oppenheimer. If you follow Oppenheimer, they initiated coverage on this, put it to outperform. The quote I put, the quote from the analyst: continued ability to thwart unfavorable trends within the retail sector. Why you got to say it like that? Like, why are we trying to impress people with our words? Just tell us what's going on. They think that Five Below is doing well compared to other companies who are finding issues as the economy maybe gets a little softer here. Five Below is able to push through that, and they think they will continue to be able to push through that. There. Is that so hard? Rare breed, rare mood today. Amazon. Well, Amazon, JP Morgan, Berkshire Hathaway, we talked about this yesterday. They've teamed up. They're going to conquer healthcare and just solve the world's problems, or the U.S.'s problems. Haven Health is the name of the company. Big deal. They announced it. So it's kind of exciting just to see progress being made there. Awesome guy running that company, by the way, if you get a chance to read a little bit about him. Constellation Brands. These guys do alcohol and spirits and whatnot. They were rated, Credit Suisse put them to outperform. They put their, I just put it down because they put their price target at 230. Go on the chart. Are you on the chart? You're on the chart. If we look at 230, what? All the way up here. They think Constellation Brands gives you a 36% return. Yeah. So also in the analyst thing there, free cash flow. They expect an increase in free cash flow. 36% pop. Not my suggestion. That's what they said. Hey, Budweiser. It's actually called Anheuser-Busch InBev. Well, can you see it on there? Anheuser-Busch InBev is what they call themselves now. No longer a U.S. company, by the way. Downgraded by RBC. They removed them from their top pick to just a normal outperform type pick. They said the stock price is close to their profit target. That's the only reason they downgraded it, because they didn't downgrade it. They took it off their list. But they basically hit their price target, and they think that profit margins from here are likely not to expand, but rather stay sideways or contract. So they're making a prediction there that maybe this is just going to be a boring stock for a while. Not a weak stock, just they think it's going to be a boring stock. Estee Lauder upgraded by JP Morgan. The JP Morgan analyst said they will hit their earnings and revenue goals for the next earnings announcement. So they're awfully confident. And so because of that, they think the stock holds up there. One of our stocks in our portfolio here and just refuses to pull back. You got to love when you see that. Hey, let me just put out, you follow this sort of thing. Floor and Decor, technical chart pattern that the bulls are going to be looking at here. If you like, you see what I'm talking about if you're one of the technical traders out there. That looks like, to me, maybe ready to break higher. I'm not telling you what to do with it. BlackRock, the CEO, came out today and called the modern market theory garbage. He just called it garbage, right? One of the smartest dudes, man. If you get to know this guy here at BlackRock, the CEO, oh man, smart guy, calls the modern market theory garbage. I think I'm going to do something on this just to give you an idea what this all means. Basically, the idea is a country who borrows the money that they print could print forever and never have any real issues, meaning the country's deficits could just keep going and going, and because you're borrowing the very money that you can print, why not just print more and yay, right? No problem. So BlackRock's CEO just called it garbage. Okay, I'll take it a step further. Just go look at any country that did that and is currently doing that and show me why that's a good idea. It's not a good idea. Please don't fall for that stuff. Anyways, if you have any questions, I'm happy to help. You stay away from trying to time the market. Oscar, yeah, no, it is difficult. I'll give you that. I know it is a passion for some, and just like anything else, if you do it enough, you will get good at it. I could literally reference well over a dozen people just as I'm thinking. I was going to say 5, and then I thought 10. The more people I can think of, I could literally say there are people that do quite well. They don't go out selling courses on how much money they make trading. They just sit there and do their thing. And when people tell them you can't beat the markets and all that, they don't raise their hands and they don't say, wait, you're wrong because I do. They just quietly do their own thing. There's a great trader friend of mine over in Palm Beach. You'll never know him. Like, I've tried to get him on the show, tried to come get him and talk about it. He does not care. He just does his job. And I've referenced him before. I've talked about how he trades, but you have to be into it, right? This is not something where you open a Robinhood account and you think you're going to trade your way to riches. It's not going to happen. I'm sorry. I can promise you it won't happen. But to stay engaged, if you like to actively buy and sell stuff, man, you just can't ask anything better of somebody to be interested in the markets. You don't have to buy and sell a lot, but I think that is just incredible when people take an interest in their money. Yep. Cool. Yeah, I didn't say a word about Mass Effect. Yeah. Costco. Yeah, that's right. We missed out on Costco. So they reported earnings as well, right? Tomorrow, by the way, you got Big Lots. If you like following this stuff, you got Big Lots coming out, and that'll wrap it up. The other earnings, Navistar reports. Do we care? I don't know if that's something you guys want to hear about, but Big Lots would be the name to report there. Bitcoin had a 1% day today, if you follow that sort of thing. I think you can't use technical analysis so much on this. It does have its moments. I could certainly point out lots of great points there. But if you do like to use it, you really like what Bitcoin's doing right now. That's all I'm saying. If you believe in technical analysis, you really like that bottoming pattern. So maybe it wakes up. I don't know. I don't follow it that close enough. Oh, the 3-day hold. T+3, they call it. Yep. Everybody does that. Unless you're trading on margin. So whenever you say that 3-day hold, that's always a dead giveaway that you're trading with a small account. Which is great. Keep doing it. Build it up little by little. All right. You think the S&P is going to pull back towards the 2,600 level? Well, let's put it this way. If it does it, I hope it happens quick. 2,600 for me, all in one fell swoop. No, if I had to, gun to my head and I had to say, I think we're in for a good bit of back and forth. This is clearly an active traders market. Been tracking how many stocks or have been positive or negative by 1% all week long. And that's a sort of a quick look at, is it a traders market or is it a buy and hold market? It is very clearly a traders market right now. Even though earnings season is kind of pulling back and relaxing and everything. So with that in mind, the short answer is I think we do see some chop back and forth. Yep. Okay, that's all I have for you. I'm going to wrap it up there. If you're one of our customers, we'll see you later today. If not, please take a moment just to watch the class. I promise I'll go through everything real quickly and then stick around to answer questions. That'll be tonight at 8 o'clock, and we're going to get in depth, so put your glasses on, get comfortable, grab a drink, come sit with me for a minute. I'm going to teach you guys something and, of course, cover everything that I promised I would cover. You guys have a great evening, and if I helped you in some way and you're not one of our customers, maybe just hit the subscribe button. A typical YouTube answer. Smash that like button and all that. I don't ask you to do that. Just hit the subscribe button. I appreciate it, and, yeah, we'll talk to you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.